How are you guys?
Awesome.
Well, why don't you introduce your guest? I know we tried
Actually,
to have him on once before.
we weren't going to do Zoom today. I actually brought him in live and live in person. So
She didn't want any hiccups like we had last
We
time. So she's like,
record, just so you know.
absolutely. This is
Yeah.
Christopher Pike. He is actually in our commercial division, just came on board with us, but he is the former economic developer for South Fulton for how many years, Chris?
3.5.
Yep, 3.5 years. So he has a lot of great insight and just some things that he'll share with you later on in the event.
Awesome. Awesome.
Great.
Well, let's jump through the numbers. Stephen, you may need to give Jeffrey permission to share his screen. There you go. Here. Well, let's jump straight into it. Basically, what we're looking at here in Fulton County, there's 789 active listings right now. That's a considerable amount more than we've seen in the past. So what I want to make sure people see first in that number is opportunity. And we've been talking about it. Opportunity looks different in different markets. And opportunity right now says there's more houses out there available to go show buyers to than there has been in quite a while. And what doesn't show in that number is there's actually less competition right now. So I think that the prudent agent, I'll use the word aggressive agent, is going to go seize the day and find the opportunity in those numbers, just in general in the real estate housing market. However, what I want to keep our finger on is sometimes more active listings means we're selling less houses. And we know that there's a potential of the market getting disrupted a little bit, slowing down a little bit. We understand that that's probably going to happen, but if you're looking here, the last 7 days, we closed 413 houses in Fulton County. It looks like we're missing today's data.
Okay.
But let's jump over to DeKalb County. Yep, Stephen, we're missing the data for this week. We're going to have to get back with everybody on this data, unless I'm missing something here. Okay. All right. Well, let's jump over the articles. So the Realtor Association puts out statistics, and underneath these statistics is a conversation around affordability. And Rick, I mean, Toya, anybody jump in here. Why is affordability like the measure right now that we need to understand and make sure it's just driving everything?
Well, there's two parts. One's the psychology of what you should or shouldn't do with your investment potential. And the other half of it is the reality of having budgets and, depending on your income and the cost of living, to fill up your tank of gas now, if it's $100 versus $50, that $50 3 or 4 times a month changes the dynamic of some of your decision making.
Right. So affordability is just such a big deal because it drives everything in our world, right? Like if people can afford houses, there, click that housing affordability index. If they can afford houses, we have an opportunity to thrive. If they can't afford houses, we have to get creative, or we're waiting on the economy to come back around where affordability becomes such a big deal. Here's the challenge where affordability is becoming such a big deal, Toya, and I want y'all's comment on this, is we've had such historic price appreciation over the last few years. Now you put interest rates going up on top of that. Now you take disposable income from people with inflation, meaning they have less money, because I filled up my tank of gas today. I felt it. But then you got this other factor, which says the median income hasn't really gone up proportionately to everything else. So we're kind of moving in this weird affordability conversation.
So you're absolutely spot on, Brett. I think the conversation has to be is where can affordability be found? And we're seeing that people are having to move further and further out in order to obtain that affordability because everything else has gone up. Food has gone up, everything. You just talked about gas prices, but I think what we have deemed is that, most things are, we don't have affordability here in Atlanta. So we've got to look outside, just widen our spread a little bit just to see where we can actually find affordable homes. And of course, I love bringing Southside information because there is affordability still in those areas.
Tell us about that.
Pike, you want to talk a little bit about that?
Sure. Well, one of the things that we're seeing is the thing that creates issue with housing affordability is also the availability. And a lot of the cities on the south side are really issuing a lot of single family building permits. And so we're seeing, like, for example, in the city of South Fulton, we issued somewhere around 1,100 single family building permits a year. Well, you're starting to see similar numbers in Fairburn and also in Union City as well. So you're getting a lot of housing inventory that's going to be coming over to the market as well. So I think as we continue to see builders put out more product and the slowing, obviously, interest rate raising obviously is going to make it where less people are being able to afford. I think you're going to see that affordability number come down. But I think the other thing that we don't really take into consideration is that the Metro Atlanta is growing by 10,000 people a month. So not only is the inventory, but also the growth of the population as well. So while we're saying that incomes aren't growing, and obviously people's incomes haven't grown at the level that housing prices have gone up. I mean, that's just reality. But then you're adding on to that the new 10,000 people that are coming into the market and whatever that represents in new housing as well. So I think you're going to continue to see, even if the market slows down a little bit, just because of our growth in Metro Atlanta, we're still going to see that housing is going to be strong.
Yeah, I agree with that. You're in our commercial sector. What does the conversation in the commercial world look like?
Well, we have people. Well, I do a lot of land. Most of my stuff is land, so I deal with developers and investors, and they're trying to put up multifamily housing because they're seeing the same thing, that the need for housing is just continuing to grow in the metro, and especially we're seeing a lot of these rental properties coming on, these rental subdivisions coming on board. I don't know long term how that's going to affect the market because it's a relatively new phenomenon. But I know that cities are trying to figure out how do they manage that process and what does that look like for their home ownership versus rental in their community. But definitely in the multifamily housing, it's still as strong as ever based on what we're seeing, especially on the south side.
Absolutely. I'm not sure everybody that listens understands what you just said about the subdivisions for rent. I just want to clarify to make sure everybody kind of understands. There's a lot of institutional investors that are now buying land and building entire subdivisions with the intention of never selling them, just keeping the whole subdivision for rental. And that's kind of new, right? Like before they would put their money into building an apartment complex or building a mixed use development with retail, with living on top of it. Now they're actually building entire subdivisions and doing from the start to finish development. And you're right. I think that's a new thing in our industry that you're going to see more and more of. Of course, in order to do that, you got to have the land, right? And where's the land? It's not inside the loop, right? It's out in the outer areas. So certainly worth conversation and talking. And if affordability gets out of control, the rental market actually hopefully would thrive from that in that context, but rental rates are high too these days.
Yeah.
So interesting conversation.
There's real affordability, and then there's also the perception of affordability. And to your point, with 10,000 people moving here, a lot of them are coming from expensive markets where the perception is we're on sale, even at our what feels like a peak lack of affordability in the current scheme. So they're coming down with cash from the sale of their properties, paying all cash sometimes. And $1 million house in New York might be $450 in Atlanta. and feel like half off. And so and that still supply and demand ultimately still drives values.
Sure. 100%. Well, let's jump over to this next article. The next article talks about what the chief economist of the National Association of Realtors says. These are the 6 things we need to know right now. Will you scroll down and let's get down here to these 6 things. So the first thing is buyers need to rerun numbers on mortgage rate as mortgage rates rise. So what I hear in that is mortgage rates are a moving target right now. We know the Fed is supposed to meet this week, and there's a high probability they're going to do a rate hike. We're expecting 0.5 point. That doesn't necessarily translate to 0.5 point in mortgage interest, but it'll move that direction. So as things are constantly moving, how important is it to be, as an agent, to be on top of a buyer and them having their rate locked and all that stuff? Yeah.
Well, yeah, but then also on the listing side of it, you better be calling those lenders and making sure that those numbers actually are still intact for that buyer. Anything that's dated a week or longer on a pre-approval letter, pick up the phone and make sure that's still valid.
Still a lot, because most lenders won't lock a rate until they have a property under contract, which means that letter they wrote in order for them to make an offer on that property means that they're probably not locked yet. So there's a risk in that interim period of when you're taking a pre-approval letter, taking a house off the market under contract, and that buyer actually getting that interest rate locked. So the prudent seller's agent is on top of that, and the buyer's agent, you need to be in heavy dialogue with those lenders because it's a moving target right now.
Well, it's a good time to make sure that you're working with quality lenders who stand behind the letter. That's the other piece of it. If things shift dynamically, the caliber and quality of the person you're in business with will dictate the quality of the experience.
Yeah. I mean, how many deals over the years have you counseled people through where the bad lender didn't get the deal done? And it's sad because the consumer hurt because of it, but it was really just a poor professional, I'll say.
100%.
Yeah.
If it's not in writing, it doesn't exist.
Yeah. So, go ahead, Toya.
Can I add one tool? And I thought it was great at the mastermind that you all did for not too long ago, the KW app that we have. I think that's an excellent consulting tool to use to show them what a 0.5% or 0.25% would look like in terms of their payment. So I think when we're talking about motivators, and we've heard from the first of the year, interest rates are going to have a 6-time hike this year. So how many times have they gone up already? What is it, 3? Yeah, we've gone up 3 already. Yeah. So we have there will be 3 more times this year that interest rates are supposed to go up. So I think that's an excellent tool that we have to share with our clients to really consult them on. It's a great time to buy now.
Yeah. The other thing that I find ironic, Toya, in that whole conversation is most mortgage calculators on the internet have a pre-programmed interest rate, and it's not relative to what the real rate is right now.
Right.
It's usually much lower.
It is.
I don't know if there's a bad expectation being set or not, but anyway, let's jump through. Inventory shortages persist. We know that, here I'm telling you, hey, there's opportunity. We got more active listings on the market. I do see that as opportunity, yet it's still not high inventory. It's just better than it was and less competition than it was. But at the end of the day, we're still in a tight inventory market, and we don't see that changing in the short run, which on one hand, guys, that's a challenge. But on the other hand, that one thing is probably what's going to protect the prices of real estate, right? It's going to keep them there. Third is prepare for high prices on suburban homes in particular. Any comments?
I
think it's self-explanatory.
Right.
Yeah.
Just know the price is probably here to stay. For everybody that's holding out on a deal, I don't think it's going to happen in metropolitan areas. You might get deals in some second home markets or some smaller markets where people have some immediate need to sell. But in major metropolitan areas, I don't see a lot of deals on the price coming down the pipe deal.
Well, and demand's going to continue because of the stay-at-home strategy that exists today, work from home. People are now, there are actually small polarized communities like Branson, Missouri, that's booming simply because people are moving there for quality of life and can work remotely.
Yeah.
So suburbia, used to be that urban markets were really strong simply because you avoid the commute. Now, suburban markets are equally attractive if you have the capacity not to commute in.
Yeah, crazy. And then the last one he said is some buyers may want to consider a 5-year ARM. I'm actually hearing 7-year has the best terms. Don't quote me, talk to a professional. But, the thing is you can see on the screen, it says a 5-year ARM rate comparatively is like a 3.9% interest rate fixed for 5 years versus a 5.5. 1.7% in interest is a decent gap, right? The wider that gap, the more advantageous that ARM loan looks. Yet it's still going to be a tool in the tool chest that we have to understand as professionals how to navigate the market as these rates go up, right? So I think that's important. The next article, Rick, we talk about this all the time. The stock market, it's not doing very good. It's not having its best day in a while. Let's leave it there. They use the word plunge. How tied is the stock market to our industry? I mean,
it's hard to knee jerk. Here's what I think. I think it's hard to knee jerk sell all of your real estate.
Yeah.
So if you wake up with that stomach knot that says, oh my gosh, my savings are about to evaporate. And unless you're 65 or 70 and you need it in the next, year or 2 or 3, it's just hard to liquidate all of your real estate. So I think there's not going to be a rush of supply that's going to tip the scales. Stock market, it moves with a lot of emotional energy. And so the real question, and it's happened, there's a graph somewhere buried in this that shows the percentage shift and change year over year. I don't remember if it was in this article or one of the others you sent, but it was interesting to me that in the beginning, it was in February of 20, it dropped 33%. I don't even remember that.
no.
And the reason is it didn't last. So the real question is going to be, okay, so it's dipped and dropped. How long? And are there buying opportunities? And does the reset happen now? Or in the time frame that you need the money and it causes ultimate distress?
You know why I know it dipped in February 2020? Because I bought Carnival Cruise Line in March 2020 and I'm still not ahead. So I did, but I'm going to throw a wild thought prediction out there. I think the environment of the 80s put a lot of people's wealth into the stock market, their 401ks, their IRAs. There was just a lot of amount of wealth that people put their faith into the stock market. And in the multiple recessions that just took chunks out of people's wealth over time, I think most people's wealth is more diversified today than it was 20 years ago. And I think there's more people that have wealth in real estate, less in the stock market, or it's more diversified. So I don't feel like the emotion is as high around this conversation as it was 20 years ago, right?
I'd be curious, Toya, your guest, how does that impact commercial and land as well? Is it across the board the same, or?
As far as the reaction to the markets, or is it?
Yes.
Mhm.
I think people, especially in the commercial world, I think if you look at it from the Warren Buffett principle, is no matter what the market does, you're always in a position to buy. It's always going to come back. I think in the commercial real estate, you kind of look at the same thing, is that, land is never going to depreciate in value. So for them, it's still an asset to be acquiring and to grow. So all of my folks that I work with are all trying to buy what they can buy as fast as they can buy it.
Yeah. There was a
And I
smart guy that put buy dirt on a t-shirt somewhere.
That's right. I was going to say Gary Keller said buy dirt. There's one other thing that I would add. Doug Duncan, who's the chief economist of Fannie Mae, he's not worried about, Rick brought up an interesting point. Are people going to offload their properties? They're not looking at that. They're not even concerned about foreclosures. You know what they're concerned about? They're concerned about people refinancing. They're concerned about people pulling all of this equity now that their home is worth 2 to 3 times the value. They're worried about loan to value, actually the refinancing in terms of cash out refinance. That's all they're worried about. So I don't know that we'll see an influx of inventory coming on the market. What we will see is, are people able, some people will be pushed to the limit because now they cannot afford their taxes or insurance, especially if they were already at the tipping scale and they're affected by COVID or whatever it may be. There are no more, what were the things that we came out, incentives that were being brought out. But Fannie Mae, they're not concerned about seeing any of that offload, and even in foreclosures increasing, more so just the cash out refis, which I thought was very interesting. Makes sense.
Let me hit 2 hot topics real quick, and then I'll throw it to you guys, Toya, whatever else you guys wanted to cover. Atlanta condo market is really thriving right now as a result of low inventory, as a result of single family homes price appreciation. So it's actually kind of driving people back to the condo market. So Atlanta Business Chronicle wrote an article about how the condo market is really lighted back up. And we've actually made mention of this before on this call, but there's proof that the Atlanta market is the leading iBuyer market in the country for all these people buying these homes, get a guaranteed offer on your house. And as a real estate community, really the way we combat that is being in relationship with people and making sure that we're the counselor and helping them see that that's not always the best path forward. Yet the iBuyer companies do a great job of marketing, and they're getting to our people before we are, and that's on us. And it just says, pay attention, we need to be there. That's a big part of where we're going. So Toya, you can pull your screen down.
Yeah.
What y'all need to tell us?
So here's what I would say, and I think this is applicable no matter what market you're in. We have 6 options to sell. I know that West Cobb, Cherokee, they do a very good job in terms of marketing that program. We're doing the same. And I will tell you that people want options. So we have to be the expert in terms of what it looks like. And guess what? We do have our own iBuying program as well. So if they want to go that route, we have the option. So those guaranteed offers are there as well. The other part is we've got to have options for buyers. We really do have to look at some of the things. Somebody needs to be muted. We really do need to look at what other options are available for our buyers to be able to win the bid. That means you need to know what programs are available to turn it into cash or whatever it may be. So I think if we continue to fill our wheelhouse with options, I think we'll always stay ahead of the market and be able to gain off-market property and just be able to offer and afford more. So those are the 2 areas that I would say for buyers and sellers. Know your programs, know that there are options available, and look at what the options are. Pike, what would you add in terms of opportunity just, in the South Atlanta market?
Yeah, absolutely. Well, I think, one of the things that you're seeing is that a lot of the communities, especially on the South Side, are rolling out these master plans for what they want to see their communities be in the future. We all know, if you've looked at some of the other communities that have done these downtown revitalization plans and really put a lot of money and incentives to have developers come in and create these quality of life amenities, that's going to make the housing market even more, more attractive. And so you're seeing communities roll out these big, expansive master plans that I think we really should be paying attention to, especially in East Point with some of the stuff that they have going on. They're getting ready. They're doing a trail plan already. They're getting ready to connect to the Beltline in Atlanta from East Point. So you're going to start seeing areas and neighborhoods in East Point change a lot. College Park is, they're still pumping that 6 West development, but there's some other cool mixed use development things coming along in College Park as well, which was already a strong market, I think, from a residential standpoint. That's where I live in College Park, so I pay attention to that. And then South Fulton, the city of South Fulton, it has the most undeveloped land than any city in Metro Atlanta. So you're going to continue to see opportunities pump out in that area. But also when you look at other counties, like what Fayette County is doing and Henry County and Clayton County, they're all having a lot of housing being built as well. I think Clayton County has more houses being built than any other county in Metro Atlanta or something like that, I read. So there's still a lot of opportunities. And as I tell people, there's more dirt south of I-20 than anywhere else in Metro Atlanta. So you're going to continue to see developers paying attention to what's happening on the south side and taking advantage. And you can still get a piece of dirt. I say piece of dirt. I've always said that. You can get a piece of dirt. You know, if you look in the right places, you can get something pretty inexpensive on the south side still, but it's changing fast. It's definitely changing fast.
I love it. We got our stats pulled up, so we're going to run through those real fast so everybody knows what the numbers are. In Fulton County, there's 777 active listings, slightly down from last week, but the trend shows high on a 2-week period. That shows that active inventory is much higher than it's been. And I see opportunity in that. As far as closings, I want to make sure we're watching it. Of course, in middle of May, we saw a spike, but 417, that's still a good number of houses over a 7-day period. If you hit DeKalb County, you got 494 active, kind of an all-time high. If you look at the chart at the bottom, closings 251, holding pretty high. I mean, it's still the spring market got into the summer market, so we expect it to be high. But you're hearing stories around the country of these numbers starting to go back 10% and 20%. I'm not sure. I've seen certain pockets that are starting to pull back a little bit, but I'm not sure I'm seeing it in these numbers yet. Are y'all? Cobb County, I'm expecting to see it in the numbers, but I haven't seen it in the numbers yet. 507 active listings, all-time high, 251 closings. You look at the pendings, 311, active under contract, 119. I mean, that's what a June's supposed to look like, right? You can hit Clayton County, same story, 74 and 38. Douglas County, 93, 58. Go on over to Cherokee County. And 219, 133. The big counties are holding high in that big inventory. We're sitting here in Bartow County. Go ahead and click on it. 84 active listings where we're at. I mean, that's an all-time high. So I think that's the story right now is if you're an agent, this is not time to go sit on the beach. This is probably the last great weekend for open houses if you have intention of closing real estate out this summer. Because everybody you meet at open house is going to take 60 days to close them. So get out, hold some open houses, be assertive, be aggressive, go take territory, guys. Any last comments?
My only last comment would be this. In all of those reports in every county you clicked on, there was one number that increased over every week, and that was withdrawals. So if you talk to me about where can I find someone, those in every single county, it was up. This whole entire weeks that we've been tracking it, that's an opportunity for people to go out, for people that have already listed their property that say that they want to sell, to go back and see what changed. So to me, I look at expires and withdrawals as the opportunity.
Hashtag asterisk, do not call this TCPC, whatever the saying is.
Yes.
You do not call people on the do not call list. Always, we have to remind everybody. Thank you.
Thanks, guys.
Awesome.
Happy Monday.
Thanks. Happy Monday.